Mr. Krishna Sanghavi, the CIO Equity, Mahindra Manulife MF is also joining us on the show. Hi, Mr. Sanghavi. Good to be speaking with you. What's the overall market setup you believe right now? Because yes, markets have run up quite a bit, and everybody's talking about that a correction is imminent, but one doesn't know when and one doesn't know why it will happen. Any guesswork there?
Yeah, sure. Hi. Thanks for having us. And see, very broadly, let's look at market correction is obviously something which is a favorite discussion point. But we got to look at it more with A, economy, and B, in the sense that over the entire market cycle of last 5, 10, 15 years, we would have had enough of such instances where everybody's waiting for correction. But the reality, we have to track economy first, and I think economy is doing reasonably good. So to an extent, it's always going to be a replica play in the markets. Another part good right now for the market really is the flows supporting markets quite nicely. Flows across the segment, and so to that extent, little bit, if one is to worry right now, maybe one part can be the flows, which can really create some sort of a slow moving market or some sort of issue there. Otherwise, broadly, economy is looking good. We're on the right track for next 3, 5, 7 years of journey. So for many investors who looking to invest for this longer term journey, perhaps it's the right time to be there.
Okay, still a right time to invest if you have a long-term view and don't try and time the market for those corrections. But where incrementally should one should put money to work, Mr. Sanghavi? Because of course, a lot of these PSU sectors, railways, defense, look very frothy, and it's difficult to find value, or it's just difficult to put in money right now. Are there any sectors which look better on a risk-reward basis? Maybe an auto, maybe an FMCG or a pharma or something like that?
Yeah, sure. So I think if you look from a sector wise, something which is, let's say, physical economy sectors like maybe, power, maybe commodities, maybe in energy, oil and gas, that looks interesting. From a broad India theme for next 3, 5 years, manufacturing remains possibly the, fulcrum for India's growth, because we on this good path to achieve our own, Atmanirbhar by way of import substitution or generating our own export potential through PLI, etc. So I think that's the second part, manufacturing. And in a way, consumption, you're right, maybe FMCG, maybe, discretionary, because eventually, that's the end game for when India does well, nominal economy grows, per capita income grows, and by default, consumption picks up. So that's, the broad thought, maybe, on sectors. But yeah, in this entire journey, we always goes through, ups and downs because of valuations, at point looking slightly rich or slightly more favorable in multiple sectors.
But Krishna, soon we're going to have, earnings as well kick in. Of course, IT is going to be first of the lot to declare the numbers amidst the heavyweights, or large caps rather. But where is it that you see any scope, if at all, for an earnings surprise coming in?
Clearly, I think earnings surprise, can come in a little bit from the consumer side of the economy, because that's a space where we got a little bit rough patch in last maybe 12, 18 months space. That's on the consumer side. I think on the capped goods, etc., the order execution momentum is pretty strong, so they can really surprise, because that's a space where your order book is in place. However, maybe valuations can be partly factoring that a quicker execution cycle on maybe capital goods. So that's another space which can surprise the markets broadly in the near term.
Right, quite interesting. And what is part of the avoid list? Is it IT, or is there merit to believe that there could be a surprise there? Perhaps a change in commentary, if nothing else?
Yeah, clearly, engine commentary is something which can drive IT, far more in the absolute near term, because way one understands the global economy right now, more notably, the US and Europe. I think getting a big earnings surprise in the absolute near term may be a bit challenge. But again, if you focus slightly on a medium term, I think that macro, outsourcing, how these companies have evolved over time, continues to remain favorable. So yes, IT can be a little bit of a surprise more from the management commentary, because they are able to cite how they're dealing with their customers and the kind of visibility they're getting there.
And what's the view on manufacturing as a theme, and any specific budget expectations that you have, in the sense which could be good budget plays, a tactical idea, anything?
Yeah, honestly, manufacturing as a theme is so good, in a sense that we have a nice combination of a demography of 140 crore people who are possibly able to consume a lot of things at a price point affordable to them. We have a nice market where India is trying to achieve some sort of import substitution. So all the existing products already consumed by Indians can be made in India and under maybe PLI or under Atmanirbhar Bharat, depending on the product category we say. And similarly, exports as an opportunity is there in manufacturing. So as a theme, I think manufacturing is good. Honestly, it's not really a great idea to try and anticipate something purely from next budget, which might just be 10 days down the line. But yeah, the macro piece remains good that be more likely to be driven by manufacturing led economic growth maybe for next again 3-5-7 year period.
Just before I let you go, a question overall as to how difficult it is to kind of find ideas right now, because we're just getting those SIP data of yesterday, which was above the mark of 21,000, and a lot of fund managers have started complaining that at this valuation, it's difficult to still find good ideas. Is that something that you are also struggling with a bit, especially in the mid space?
Yeah, sure. I mean, what's clearly happening is that sometimes the money flow from customer demand side or willingness to buy side is slightly higher than available opportunities, and that's where one ends up debating about valuations being right or wrong, because that pool of money needs to be invested in markets. And clearly there are some pockets where you believe that the current stock prices are factoring maybe next 3 or 4 years of earnings, and to that extent though fairly richly valued. At the same time, if you look at broad market as an overall picture rather than only SMITs, I think large cap offers reasonable value across space. The earning growth there also can be nice surprise vis-a-vis what we've been expecting over last maybe one. If you look at last 12 months, I think a lot of news flow has been dominated by small caps having done reasonably well on both maybe earning as well as multiple expansion. We believe now large cap offers slightly better value for the near term, maybe now next 6 to 12 months period. And there are reasonable opportunities, especially I mentioned physical economy space, which is power, commodities, energy space, etc. Maybe manufacturing. And again, best part about manufacturing is that it's not really related to pure capital goods. It actually can be across, can be automobiles, can be consumer discretionary, can be pharma. So to that extent, manufacturing also offers some spot where one can invest. But clearly, yeah, at this juncture, with for the kind of money flow that's coming in, it's a little bit challenged to find something is offering value.
Okay, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thanks.
If you like this video, then like, share and subscribe to ET Now.